Hello Forex traders, this is Eric from the Forex Point and Figure System. If you want to learn more about it, visit fxpnf.com. Well, today is Friday, May 2nd. It's the first Friday of the month, and you know what that means? Monthly U.S. labor report, or also known as the non-farm payrolls number. And that came out in the U.S. this morning, and it came out a lot better than expected. Now granted, we still saw a loss of about 20,000 payrolls, but that was a lot less than was projected. The total was 80,000, and that's what most economists were expecting. So that has many Forex traders now positioning and thinking that the Federal Reserve, who cut rates earlier this week, will probably be done for quite some time. And I think that makes for an interesting setup in the pound US dollar. I've been following this pair on the blog on my site for a couple of weeks and speculating that it has a lot more downside in it. My thinking is that the Bank of England, struggling with their own domestic subprime problems and the deterioration of their own housing market, will soon have to cut interest rates, and that could lower the appeal of the highly valued pound, which has attached to it still a pretty high interest rate. We could see an unwinding of some carry trades and definitely some devaluation of the pound. Pay special attention to how this pound US dollar on the daily chart here in the candlesticks has been rallying up in the past week to 199, but not able to get above it. You can use any rallies going into next week up near this level as good low risk entry points. Now looking at the point and figure chart, this high right here is equivalent to what we saw in the pound dollar a couple of weeks ago. It's up to 2 even. That means you can set a stop at 201 and be very comfortable, give the pair a lot of room to work its way lower if indeed the Bank of England does decide to cut rates. So this is one of my best ideas going into next week for the Forex market, where we should see plenty of more action as we continue to transition from a very bearish US dollar market to one where the dollar is starting to stabilize. And I think that should present some opportunities in many of the pairs that we're trading.